Hey folks, welcome back to Mindful Finance. We got a special episode today where we are zooming out to look at the global financial scene. And trust me, you'll want to stick around for this one. We are diving deep into some key US economic indicators and what they mean for us here in India. So let's get started. And this is Sundar and you are watching Mindful Finance. Alright, let's kick things off with the United States. You know what happens there often sends ripples across the globe, affecting markets everywhere, including ours. So let's break down some numbers. The first one, let's talk about US GDP. It grew at 2.6% this year. That's the fastest it's been since early 2022. Now, why should you care? Well, a strong US economy often spells good news for us. It means more stability and more investment opportunities right here in India. The second one, which is US jobless claims. Jobless claims have dropped to 198,000, the lowest since 2020. Strong job market in US is a sign of healthy economy which can boost demand for goods from countries like ours. So keep an eye on this one so that it's very important as an investor. So moving on to third one, which is a durable goods orders. They rose by 2% in September, beating expectations. This is a sign that businesses in the US are feeling confident and are willing to invest. For us, this could mean higher demand for our exports like steel and electronics. The next one is consumer spending in the US went up by 0.5% in September. Now, this might not sound like a lot, but it's a sign that people are still spending despite worries about inflation. For us, this could mean steady demand for our exports. The next one is speaking of inflation, the US core PCE inflation went up by 0.3% in September. Yearly, it's up by 3.7%, the highest since 1991. Now, this is something we need to watch closely. Rising inflation in the US could lead to changes in their interest rates, which affects global trade. The next one, let's talk about central banks. The US Federal Reserve recently hiked interest rates by 0.75 basis points. It's the sixth hike this year. The Bank of England and the European Central Bank are also adjusting their rates. For us in India, these changes can affect where global money flows, the value of our currency and our trade balance. These changes can affect where global money flows, the value of our currency and our trade balance. The last but not least, the IMF has revised its global growth forecast for 2023 to 2.7%, down from 2.9%. We need to keep an eye on these numbers. They give us a clue about overall health of the global economy, which in turn can affect our investments. Let's take the technicals for Nifty. If you see the Nifty, so I have drawn a long trend line. If you see, I'll just show you the long trend line. This is the trend line. Okay, this is since March 2020, the COVID fall. You see how this trend is being currently supported. So it took a support over here and again it came close to this one, but it has bounced. So if I go to the weekly daily timeline, so this is the current state. So it has made a higher high, higher low, but it has broken the support over here. And as I mentioned in my previous one of my charts, in the month of October, starting of the month of October, we predicted this. This is like a head and shoulders, like this was making a clear cut head and shoulders pattern, and we expected a target of say this much. So this is the head and shoulders target supposed to be. So my expectation is it's supposed to come at least to this support level. At least it should come to this support level. And if you see the current volume, see the selling volume is more, and whatever the bounce is seen recently, don't believe this bounce. This is, see the volume, it is not even closer to the average volume, and this is just as maybe like because of the weekend people would have wanted to close their things and they just squared off their contracts, and this is a very strong bearish trend. So keep a tab on that. Don't believe if it moves it is going to be a bull run or something. I don't believe any bull run is going to happen at this point of. It's purely a profit booking from the FIA side. See, if you see, this is the FIA's buying, and this buying is now been, so if you see the buying is been now sold out here, and this is what the retailer's trap has been. Okay. So if you see this volume, right, if I go here, this is belongs to this candle. So I feel this gap supposed to be our support. So this gap is going to be our resistance. So that is why it has already taken a bounce. So let's fingers crossed. Let's see what happens here and take a bet based on that. Now let us look at Bank Nifty. Similar to Nifty, you can see a very nice trend line, and it is respecting the trend line. It's very nicely shown the support level, and it has respected that support level also. Like it is just reached close to the trend line, but just bounced back over there. This bounce, at least in Bank Nifty, if you see, it is a little bit more than the average. So this volume, we can at least trust this volume. And the long, if I see the support level of, okay, as we predicted in the earlier scenario, scenario of Nifty's head and shoulder pattern. You see this, and the price range to be, so normally half of this is the target at least. So normally this is the head and shoulders of Bank Nifty. First target could be half of this one, second target could be here. So you see the first target of half of this one, so which is already achieved. So first target is done, and it is almost at the support level. It is at very good support level, and also it respected the trend line. So the next week or November is going to be a very crucial month, because the support level of Bank Nifty is in a very crucial level. If it breaks again, there is a chance that may come till this another 7.9%, almost 8% down from here. So let's see what happens. Market is not good. Global cues also is not that great. Further, let's see what is happening in Nasdaq. You see Nasdaq also in the long trend line. If you see, this is the trend line, and it has broken the trend line now. So basically it is in a bearish momentum. If I draw a trend line from here, okay, if you see the trend line, it is in a channel. So in the channel wise, it has already at a support level, and again it may bounce. The problem is Nasdaq has to break this 14,600 level, otherwise it cannot be in a bullish trend. So again, in the US market also is very bad, and there are inflation is skyrocketing. So fundamentally seeing, there is not much scope from the US side. So we need to be very careful. Market can be a sideways close trend, and like there is, I don't see any kind of a bullish reversal or anything at this point of, because it's clearly a bearish trend in the Nasdaq. If I go to Dow Jones, let's see what is happening in the Dow Jones. The Dow Jones also, so this is the trend line. So I made a duplication. So this is the channel. So it may still can touch this trend line. So I'm expecting Dow Jones may go further at least like 32,200 mark. So that is a support level. If that breaks again, I don't think, but normally the US market, it follows a proper trend and channel ways. Every time if you see, it actually respects all the trend lines. So you see this fast, it respects, see how the channel is. The breakout happened, and again it is in a channel. So I'm expecting another 100 or 150 points down, and again it may bounce. So let's see. So this is the technical, and everything is in a range bound right now, and there is nowhere bullish trend is in vicinity at this point of. So be cautious in taking your assumptions in the point of bullish trends. So don't get it in the momentum trading or any kind of holding it long or something. It's market is very much volatile. So be careful in your trading and do it mindfully. Now these numbers might look a bit gloomy, but remember the market is like the weather, always changing. So let's dig into why these clouds are gathering. Firstly, inflation is rearing its ugly head again. Prices are going up, and that's making investors nervous. The cost of living increases, people have less money to spend, and that can affect companies' profits. And when profits go down, so do stock prices. So if you are an investor, this is something you'll want to keep an eye on. Next, we have the global economic slowdown. Companies in the US are not making as much money as people thought. So next, we have the global economic slowdown. Companies in the US are not making as much money as people thought they would. So this is a big deal, because when the US sneezes, the world catches a cold. And it's not just the US, there are conflicts and tensions in other parts of the world that are adding to this uncertainty. So if you are investing in stocks, especially international ones, you'll want to stay updated on global events. Now let's get local. We have seen strikes at some of the biggest companies in India. So employees in say TCS, HDFC Bank in Mumbai, ITC in Delhi are demanding better pay and working conditions. When employees are not happy, it can affect the company's performance. And when a company's performance is affected, its stock price can take a hit. Now let's dive into some stock specific news. Infosys has been in the news for both good and bad reasons. On the positive side, they have launched a new digital transformation platform called Infosys Cobalt, which could be a game changer, but it's not all sunshine and rainbows. Last week fallen 12% approximately, and currently around at the support level of 1350 to 1340. So TCS is another company that's making headlines. They have acquired a German IT service company, Postbank Systems, for a cool $900 million. But they have also had internal problems like strikes, particularly in Mumbai, where employees are demanding better pay. Also, it has fallen around 9.5% and currently trading it around 3,350. And let's not forget about HDFC Bank. They are expanding their reach by acquiring Centurion Bank of Punjab for $1.2 billion. But like Infosys and TCS, they also having a problem of employee strikes and other problem in Mumbai. Also, it fell around 5% in the last week, and it's trading around 1,450. If you check, it is at the same same level as of November 2020, and it has been since then it has given 0% return. Continuing on, let's talk about ITC. This company is a big player in the fast-moving consumer goods sector. They have recently announced the launch of a new range of Ashirwad Atta, which could be a big hit in the market. But it's not all smooth sailing. They have also had some employee strikes in Delhi. The workers are demanding better pay, and if these demands are not met, it could affect the company's performance. Also, it has fallen around 7% from its recent high and trading around 430. It is still an undervalued stock, and so do some analysis to check whether you want to invest in this or not. Now let's move on to Hindustan Unilever. As it's commonly known as a HUL, this company is a giant in the consumer goods space. They have recently acquired GlaxoSmithKline's consumer healthcare business for whopping $3.2 billion. This could be a game changer for them. Now it has fallen from recent high to approximately 5% and trading around 2,480, and seems like it's bouncing from its support, but considering to its peer like Nestle, it is still lagging behind a lot. Next is Axis Bank. So they have been in the news for their acquisition of Citibank's Indian consumer banking business for $2.2 billion. So this is a big move and could significantly expand their customer base. When HDFC like banks have been affected a lot, but Axis Bank alone has given upward movement of 5%. Last but not least, let's talk about HCL Technologies. They are making waves in the tech industry with a new cloud computing platform. So HCL CloudSmart, they have also acquired Dynatrace, a US-based software intelligence company, for a staggering $5.6 billion. But like the others, they have had also facing some problem with the employees in Noida. Employees are demanding better pay and work conditions, etc. It seems like it's a trend everywhere. Every company is facing or affected by strike and high requests from the employees. So what should you do as an investor, and what are you going to do with all this information? Well, it's crucial to keep an eye on both the good and bad. Companies are like roller coasters. They have their ups and downs, and as an investor, you need to decide whether to get on and when to get off. Decide when to get on and when to get off. So what's the takeaway from all this? The market is volatile. There are multiple factors at play. If you are an investor, you need to keep your eyes and ears open. Stay updated on company news. Keep an eye on those key technical levels, and don't forget to consider the bigger economic picture. That's it for today's episode. Remember, the market might be a roller coaster, but that's what makes it exciting. If you are strong, if you are clear about fundamentals of any business, as Warren Buffett says, during the bloodbath time, go and fish. So strap in, hold tight, and enjoy the ride. Thank you. If you find this video interesting and informative, please do subscribe, press the like button, and share it with your friends and colleagues. Thank you.